All right, let's begin. My name is Allison Rendelman, team lead of our Customer Success Associates at YCharts, and joining me today is my friend and colleague, Greg Cagley, an account manager on our team. Today, we're covering the third quarter economic summary deck put out by the YCharts team and available on all subscription tiers. If you have any questions that come up during the webinar, you can submit them on the left-hand side of your screen, and we'll follow up soon with the information you're looking for. Please note that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, we'll post a recording of this webinar to the support topics page of YCharts, and a copy will be sent to all attendees. Now I'm going to hand it off to Greg to get us started.
Thank you, Allison. Good afternoon, everyone. And as Allison said, my name is Greg Cagley. I'm one of the customer success managers here at YCharts. Today, we're going to be walking through the YCharts economic summary deck for the third quarter of 2020. We put this PowerPoint together every quarter and share with our clients so that you have top-notch resources to use when communicating with your own clients and prospects. We've heard from a lot of you that you're getting significantly more client questions these days, so today we're going to break down the data and trends on each slide in the PowerPoint and give some recommendations on how you could explain these trends to your clients and show you how to recreate some of the visuals using YCharts itself. So Allison, could you please do me a favor and pull up YCharts? We'll go ahead and show everyone how they can actually pull this down from the site.
I'm there.
Perfect, thank you. So all users can grab this deck from within YCharts by clicking the support tab at the top of the toolbar and then selecting support topics and then resources at the top of the page, and finally presentation materials in the left-hand navigation pane. So feel free to take the deck, add your logo to it, make any other formatting changes you'd like, and then you can share it with your own clients. You'll notice that the deck isn't locked down in any kind of way, so we encourage you to use part of it or all of it in your own presentations. We've even added notes to each of the slides, so it's easier for you to explain what's going on for your clients too. So perfect, thank you, Allison. So I wanted to note in the presentation, there are two halves. The first half being a fairly standard review of what's been going on in the broader market. And we release those same slides every quarter, so they'll just be updated. The second half is made up of charts or visuals that we at YCharts have been looking at over the last quarter or so and explain some really interesting secondary storylines going on in the market right now. So with that being said, let's go ahead and dive in. Allison, if you could please make your way over to the first slide. Perfect. So the first slide is going to cover high-level market performance, both looking domestic and international. It's interesting to note that while major outside factors like the US presidential election and the increased number of COVID-19 cases have been causing a lot of uncertainty for what's been going on over the last 6 months or so, plus what's going to be projected for the coming few months. But the second quarter in a row now, both domestic and international markets have seen solid growth. Large cap tech companies have continued to be the big push domestically. We can see that with larger gains for the NASDAQ. Globally, emerging markets provided returns in excess of the developed markets, but there has certainly been a slowing in the latter part of the quarter. With the looming transition of power in the White House and no end yet in sight for the pandemic, it's more than likely going to be a lot more volatility, or at least the same level of volatility to continue through the end of the year and possibly into early next year as well. So with that being said, that's going to lead us to our next slide. Allison's going to talk about the US sector performance.
That's right, Greg. So on our third slide of this deck, we have a few charts and tables where we've broken down the performance in sectors in the past quarter by cyclical, defensive, and sensitive sectors. And while we can talk about the individual performance of each sector looking on either the table on the right-hand side or the graphs on the left, I want to take a moment to break down these sector classifications, actually. So starting with the cyclical sectors, the sectors that roll up into this cyclical super sector are highly sensitive to business cycles, peaks and troughs, which as we go through so much back and forth with COVID restrictions, can make these sectors the ones to watch. Sectors that roll into this defensive sector category are anti-cyclical stocks, meaning you're always going to need your consumer staples, your utilities, your healthcare in and out of those business cycles. And finally, our third sector are the sensitive sectors. These sectors are seen as having a moderate correlations with the business cycle. And interestingly enough, the only negative performer for the last quarter of all 11 sectors is this energy sector, which when you consider slack in demand for energy, with many of us who work from home, commutes have been cut, travel remains very restrictive, the negative forces against that energy sector are not going away in the intermediate term. So I would definitely expect negative performance of that energy sector in the final quarter, in the quarter leading up to the end of this year, but it will be interesting to see how these other sectors perform and how the larger categories perform in the next quarter.
All right, moving along. Slides 4 and 5 are going to be similar. They depict the performance of the various major asset classes over different periods of time. The key takeaway on slide 4 here is that US large cap and growth stocks have dominated over the long running bull market, and the 3 months ending 9/30 were no different in that regard. The variety of the ranking for each asset class over different time frames creates this almost like quilt-like effect, and it's an endorsement for diversification. So there's no better way to really depict that for your clients. It also helps show longer term trends, which you can see by moving from left to right across the chart. We wanted to also note that you can recreate the slide fairly easily within YCharts itself. Allison, do you mind hopping over to YCharts.com?
Sure.
Thank you. So the tool we're going to be using is comp tables. So if you just go to tools at the top of the page and then select comp tables, you can click where it says new comp table unsaved in the top left-hand corner. We're actually going to be leveraging one of our newer templates. So you can select that first option, new from template. And just make sure when that template window comes up that you have the performance category selected on the left. And then you might have to scroll down a little bit, but you're looking for the major asset class index performance. Give that a second to load up. So the beauty of this template is that you don't have to wait for the quarterly report to come out, this slide deck. You can actually come into this template anytime you want, and it will reflect the latest available data on a daily basis. So if you have a client asking for up-to-date numbers, or if you're just trying to create the table as part of your own presentation, you don't have to wait for the latest available PowerPoint to come out. You can actually just generate this whenever you like. All right, thanks, Allison. So moving back to the slide deck, slide 5 is, again, similar to slide 4, but we are looking at major asset class performance. This time it's represented on a quarter-to-quarter basis. The latest period was, again, dominated by US growth stocks, but we also saw continued strength in the emerging markets. From this table, you can also see how correlated the returns were of various assets over the different time periods. And you can see relative volatility associated with each as well. Perfect. So I'm just going to pass it back to Allison, who's going to cover the next slide related to interest rates.
That's right. Thanks, Greg. So for all of my Fed watchers out there, this is the slide for you. On the left-hand side, you're seeing a table of interest rates from the last quarter all the way to the last year end. And on that right side, we have our yield curve chart. So we know that the Fed has indicated for all intents and purposes that rates will remain low for the foreseeable future. And we can see that in our yield curve on this chart on the right side. So just to explain what you're seeing here, the green line is the yield curve as of today, or when this deck was put together. That yellow line is going to be the yield curve what it was 3 months ago. And then the blue line along the top was the yield curve a year ago. What's interesting to note when looking at this chart in particular is, unlike the yield curves before, no part of today's curve is inverted. So lower duration rates have decreased while the longer term rates have moved slightly higher from even 3 months ago, but of course, still far away from those 2019 levels.
Hey, Allison, before we move on, I actually get this question a lot from my own clients. Would you be able to show us where they can pull down that yield curve template within YCharts?
Yeah, definitely. So this yield curve template actually comes from an Excel template we've put together. So is available for our YCharts professional users. And let me just hop into YCharts to show you where you can find that. So hopping back into YCharts, you can see our table from before, and I'm just going to go up to Tools along the top and find Excel. Perfect. And then on this Templates tab, clicking there, you can see all of the Excel templates that are made available for those who have access, and you want to scroll down to the macroeconomic section where you can see the Treasury yield curve right there. You can download it by clicking directly on it, or just get a preview of what the template is about, clicking this preview button.
Perfect. Thank you for showing that, Allison.
Yeah, definitely. So let me jump back into the slide deck then and talk about our next slide on the list, that Treasury versus dividend yield chart. So I really like this chart because it kind of gives us a point of where we are in the state of things today. We know that historically investors always turn to bonds for consistent income and look to equities for capital appreciation. We can see that with the S&P representing just a general return of what you might get for dividends investing in the market, and then that 30-year Treasury rate. In a time with historically low bond yields, however, it begs the question, I mean, at what point does a higher dividend yield attract the investment dollars that would typically go into bonds? Going off this chart here alone, it signals that if you want a higher yield, you should invest in the S&P. But in reality, I mean, how dependable are going to be those dividend payments from companies going forward in Q4 and into 2021 versus treasuries that are backed by the US government? So yields aside, you'd certainly want to maintain the cause for diversification in your portfolio. Which is going to take us to our next slide here. Greg, can you tell us what we're looking at here on the US trade and dollar strength?
Yes, so our next slide is going to highlight some of the trade data and currency exchange information as well. Global trade has continued to slow as the pandemic has greatly impacted the movement and production of goods. It's interesting to see, though, that imports from China have seen a strong uptick, but we do think that's mostly due to how relatively low that activity had been in prior periods due to policy and tensions with the Trump administration. But imports from China to the US are still significantly lower than they were in 2019. On the other hand, the US dollar has also depreciated a bit compared to other major currencies, at least from the strength it had experienced over the last few years. The dollar remains strong compared to long-term historical averages, but as government spending continues to increase, it'll be worth keeping an eye on how desirable the dollar remains to other currencies.
And I think our last slide is about government spending. Isn't that right, Greg?
That is correct. Yep, we'll come back to this subject in a little bit.
Awesome.
So that's going to lead us into the next, actually, it's the last slide of our regular slides we keep in the deck. So Allison, what can you tell us about the leading indicators and summary trends slide?
Yeah, so as Greg had mentioned, on the first half of this deck, it's pretty consistent between quarters. We're just updating for the latest quarter of information. So with this slide here, we have a heat map of leading indicators from the last quarter on the left-hand column there, all the way to those same indicators and their levels in 2007 on the far right. So this latest data was mixed with positive trends in consumer behavior and stock and bond market movements, while business activity and inventories trended pretty negative in that direction. I do want to kind of point out with this, indicator chart, we can look at all these individual ones, the S&P index of consumer sentiment and so on. But something else that is not captured in this chart that is pretty significant for kind of the recessionary periods and the business cycle ups and downs we're in right now, and that's how close we are to a COVID vaccine. So as news comes out, I mean, that's kind of the point I'm trying to make, is that it's a very tangible threat that we're dealing with right now, and that's that there is COVID-19 out there and that we're working towards a vaccine. And while these leading indicators are strong in specific economic measures, we are in a recession from a very real thing, and I think it's interesting to know how that might change things going forward. So from this point on, the presentation will shift from highlighting key storylines and data that frames the happenings of the third quarter. First up is this slide on the V-shaped recovery that we've been hearing so much about.
That's right. So, Allison, I'm going to cover what might be the simplest slide in the whole presentation, but it's something that certainly has gotten a lot of airtime as people have talked through what the potential recovery here has been looking like. I know a lot of us has heard debates about whether we're experiencing a V-shaped recovery or if it's K-shaped, what have you. Looking at this chart, we can at least see why someone might think it is more of a V-shaped recovery. We can see that there's been some nice recovery in the stock market as a whole, but housing and personal income have yet to show any kind of weaknesses since the start of the recession. So kind of takes us away from the K-shaped recovery that people might be thinking of. Jobs and GDP, however, are still well off the highs from early in 2020. So again, simple slide, but this is something that a lot of folks have been talking about. We wanted to include a little note here. So, if your clients are asking you, what does V-shaped recovery mean and all that kind of stuff, you can actually show them here with a nice little visual representation. So that's going to take us to our next couple slides. Allison's going to tell us a little bit more about the housing situation.
Yeah, that's right, Greg. So on this slide, we cover most relevant housing data to give us a view of the housing market in the US. It's no surprise that as Fed keeps its interest rates low, that 30-year mortgage rate is going to stay pretty suppressed. And many homeowners want to lock in those new rates, which you can see on these US mortgage originations. That percent change has been going up steadily over time. And as well as these US mortgage originations, refinance shares are also going up. So that's interesting to depict on these three kind of graphs there. On the right-hand side, this chart represents the housing sentiment, so how people are feeling about the market. And what's interesting to note is, of course, after a huge dive in Q2 of this year, the Q3 for housing sentiment is actually up prior than previous levels of the housing market. So it's interesting to see that the large dip that our economy took and all of kind of the pressures against the US consumer, as from a housing standpoint, now is a good time to be thinking about refinancing or perhaps first-time home buyers looking to acquire some capital. On this next slide, we have just two more kind of in-depth charts about that housing supply impacting the market. So on that left-hand side, you're seeing US existing home month supply. And then on the right-hand side, you can see the US home ownership rate. I like both of these charts, but I just want to show you, you could recreate these in YCharts if you wanted to dive a little deeper, add some more information there, or just to know how we built these charts together. So I'm going to hop back into YCharts real quick and show you how you could pull something like US home ownership rates on your own account. So jumping back in where we left off, I'm just going to scroll back up, and this time from the navigation pane under Tools, I'm going to look for Fundamental Chart. Perfect. And this is the tool that we use to create pretty much all of our charts in this presentation. But you can look for that same indicator just by typing verbatim that name in the legend. So I'm going to type in US home ownership rate, and I'm just going to click on that first one that pops up. Perfect. So we're just looking at a 1-year view, and this is a quarterly data, not really that helpful, but now I have a 10-year view. And if I wanted to, I could even go max, so I could see the home ownership rate since the beginning of time. Now, I think the chart we have on our quarterly deck actually starts in the year 2020, so I can go ahead and change that date range here. January 1st. Awesome. And then if maybe I just wanted to have both of those indicators on the same chart, I could search for the other value there as well. Just going to type in US existing home months. Awesome. And what you'll notice here is on this chart as well, I actually have these in my firm's custom colors. So YCharts can actually customize the colors that you see on the charts and the PDF reports that we put out. You'll just reach out to your account manager. They send you a form. It's pretty easy. You just can input your logo and information like that. We're able to put that together pretty easy for you. So if you are interested to know more about that, please do reach out to your support rep. As long as you have under this chart option, so show custom colors on, then you're seeing my firm's direct colors. If I switch this into presentation view, now I'm seeing that chart with my logo in the lower left-hand corner. And it's just nice to turn something that I'm seeing on that deck into something that I'm actually creating and can be sent on with my firm's specific branding there. So pretty easy to share from here. You can tweet this out, copy the link, or you can go ahead and just download that image as a PNG file, and that's going to drop right into your downloads folder for you. Hopping on back over to the deck, next up, Greg is going to talk to us about the employment situation.
That's right. So we're going to keep an eye on the employment situation in this country, obviously, but the numbers have been looking better all the time. We've seen a healthy decline in the unemployment rate with a more steep decline in the initial claims number. The employment rate is, however, still almost 8%, it looks like, and when you consider those that are underemployed, it's likely closer to about 13%. Unfortunately, I think this slide does a pretty good job of showing that we unfortunately have a long way to go still to get back to pre-COVID-19 numbers. Pretty simple slide. So we'll move on to the next one here. The next slide takes concepts from the previous few slides and analyzes things from a different lens, how different races are being more or less affected. So the concepts of racial injustice and inequality have been major talking points this year, especially during the election. We wanted to see if the housing and employment numbers can help tell the story. So while the increase in home ownership on the left-hand side here has been significant for persons of color, we can see that there is still a wide gap. On the employment side of things, the data illustrates that persons of color saw a more severe impact from the current recession, and the recovery has been slower relative to the overall data. So it'll be interesting to see what, if anything, the Biden administration does to improve these numbers and hopefully help lessen the divide a little bit. So just a couple slides left, I believe. Allison is up next. She's going to take us through the slide on consumerism.
That's right. So we always try to devote a slide to consumerism because really, I mean, that's what drives the US economy. You can see retail sales on that left-hand side are climbing back from their hole after a sharp decline, especially in that second quarter. And of course, this recovery is kind of overpronounced when you look at the orange line, that month over month, because it's taking just the previous month level, which of course is going to be really low, and hiking back up. But on this US retail sales, that's a gross figure. So you are seeing the overall dollar value. If you ignore that kind of dip, that line continues straight up, and we seem to be going within trend of even pre-COVID levels, which it will be interesting to see how, especially with the holiday season coming up, that's usually when a lot of Americans really spend. It'll be interesting to see how this chart kind of updates itself in a quarter's time. Then on that right-hand side, you're seeing the relationship between the US personal savings rate and our US personal spendings rate. And while Americans are still saving more than we have historically, it looks like that relationship between the spending and savings rate is back to its historic norms. And speaking of personal spending and saving, I think that leads us into our last slide here, Greg, where you can tell us about the government spending and debt.
That's right, Allison. So as promised, we are back to talking about government spending, and this also includes some information on national debt as well. Just wanted to note that with the record stimulus packages that have been announced and rolled out in the recent months, Treasury outlays saw significant spikes. Most recently, that numbers returned closer to normal, but it's still well above the longer-term average, especially pre-COVID. We've yet to see the data reported for how that stimulus impacted the overall U.S. public debt numbers, but we expect that the roughly $2 trillion of Treasury outlays from the last few months, it's likely to increase the value considerably. These things are often talked about during election times, so it'll be interesting to see how these numbers pan out as the country continues to try to stamp out the coronavirus. So again, that's going to be it for the deck. Feel free to download the PowerPoint from YCharts.com if you're a current subscriber, or if you are not yet signed up, feel free to sign up for a free trial. If you are interested in taking a deeper look at all that YCharts has to offer. We do hope that you find value in this particular communication tool, but look forward to showing off some of our other tools in the future on other webinars. So I'll send it back to Allison to wrap things up. Thanks, everyone.
Awesome. Thank you, Greg. So to close out today, we walked through our third quarter econ summary deck. This is something that the team at YCharts produces every quarter and is a popular tool for advisors to share directly with their clients. Given the events over the past year of COVID, a new presidency, and the highs and lows of the stock market, clients are looking for and asking for those high-level economic and market event type questions. So today, Greg and I walked you through that third quarter econ summary deck, broke down the data and trends on each slide, gave some recommendations on how to explain those trends in the data, and showed you how you can recreate those visuals in your own formatting. We hope you found this demonstration useful and would love to hear your feedback for future presentations. I do want to reiterate that a copy of this webinar will be sent to all attendees and posted on the support topics section of YCharts in case you wanted to share it with your colleagues or review what we discussed today. Thank you everyone for participating today. If you had any questions, your support rep will be following up soon with the information you're looking for. Thanks again.